Welcome back to my channel, fellow investors. In this video, I wanted to cover a healthcare company in Elevance Health. This is a healthcare payer, meaning they're an insurance company. Either through an employer or individually, you can buy a plan with Elevance and they will help you pay for your medical bills, either when your doctor submits a claim or you can submit a claim and get your healthcare covered. Healthcare is incredibly important to the US. I happen to think that the healthcare industry is excellent in the US. We get great doctors, great medicines, overall great hospitals. And I happen to be of the opinion that we are fortunate to have this industry. I wanted to take a look at Elevance Health and see if it's a good investment. I've owned Elevance Health for some time, and I wanted to evaluate it now that they've announced their earnings. They announced earnings today and have given me a fresh look at how the company is operating. In any investment, I like to look at the company, make sure that I'm buying into the company, that I think they're well operated, they have a good business plan, the industry is good, and make sure that I'm buying a business that I want to be a part owner in. I want to look at the balance sheet, make sure the balance sheet is in good health and not riddled with problems. And I want to value the company, determine what I think each stock is really worth, and compare it to the current stock price to see if it's being sold at a discount, at a fair price, or at a premium. And then make a decision. Hey, should I buy more shares? Should I just hold my shares or sell my shares in Elevance? Let's go through and make that decision. I'll make the decision for myself. With any of my videos, I'm sharing my experience as an individual investor, my journey. By no means am I recommending you buy Elevance Health as an investment. Please do your own due diligence and make your own decisions on your investments. Now let's take a close look at Elevance. Elevance stock has been a nice, consistent performer for 5 years. If you had bought the stock 5 years ago, you'd be up 101%. And it's a good return over 5 years. Over the past year, the stock has gone up 15.84%, and they pay a little over 1% as a dividend. So adding that on top, you'd be up maybe about 17% on a very good healthcare company. I like that consistency in the stock price, that it continues to go up over time. That's usually the sign of a good company. And if we look at year to date for Elevance, it's up 11.99. Very good return, especially since we are coming off 3 down weeks, especially in technology. So it's nice to have Elevance, good investment, really good consistent upward appreciation on the stock. The market cap of Elevance is 124 billion. Not too high when you compare it to United Healthcare. United Healthcare is an excellent company, but it has a very large market cap. And Elevance is a smaller market cap. So I think it has a higher chance of moving up from a stock price perspective. I like lower market caps for really well-run companies. The revenue is 171 billion. So you're paying a little over 1 times revenue for the company. It's just a solid net income from the company. Their shares outstanding, they continue to buy back shares. And this company generates a lot of free cash flow and they use it to buy back shares. So it has a smaller dividend, 1.21%, but they actually are using a lot of the cash to buy back shares, which is a positive. And we see their consistent upward stock price. I think part of it is those share repurchases that they're making. The forward PE is only 13.91, which is nice and low. I like that the PE is low and they're set to continue to exceed expectations on earnings reports. And that would just drive up the stock price. The earnings for today were real positive. They topped on the expectations on earnings per share and then rose their guidance. So in general, the earnings were positive. Wasn't a blowout quarter, it was just good, solid performance. We have multiple analysts analyzing the company. There's a strong buy rating on the company, and they have a price target that's 8% higher than the current stock price. So overall, company, solid company. I'm going to call it a mid to large cap. Those definitions are really moving quickly. You have mega cap stocks like Microsoft worth $3 trillion. So the definition of small and mid caps have changed to kind of keep up with the new scale of size. So I'm going to call this a mid cap company. Elevance has been growing their top line revenue. If you look at the last 10 years, it's been positive growth year after year after year. Just excellent growth. Looking at the statement of cash flows, there is some concern there for me. The most recent quarter, the operating cash flows was really low. And I looked into it. I think there was some adjustments that were made, but free cash flows is one of the principal measures that I have on evaluation. So if their cash flow changes permanently downward, that would really change how I value Elevance. So I'm going to keep a close eye on their free cash flow for the next couple of quarters. Multiple analysts cover this company, and a couple of things that I like about the reports is, first, their price predictions are all somewhat well correlated. When you have a high of 621 per share, the low of 550, all estimations are above their current stock price. So I don't see that on every stock. It's a rare, occasion where analysts are all saying, hey, this company is probably going to move up. Even the most pessimistic analyst is saying this stock's a good one. The forecast for earnings per share looks really good. If you look at the growth rates that are expected in 24, it's expected their earnings per share is going to grow 48%, in 25, almost 12%, and in 26, almost 13%. Exceptional growth. If they hit those growth rates, you better believe this stock's going to keep rising. I value companies based on their free cash flows and their earnings per share, trying to get to a value that I believe the company is worth. And in the case of Elevance, I believe they're being discounted by 14%. I believe each share is worth $611, but the current stock price is $535. How did I get there? I look at the free cash flows that the company is going to produce in the future, discount those free cash flows to today's value, and arrive at a particular value per share. In this case, it's $581, and compare that to the stock price. I also look at earnings per share, and that was a very impressive set of numbers that are expected from Elevance, and that drives a value of $670 per share. I combine the two. I like putting more weight into free cash flows, and I arrive at the value of $611 per share for the company. So it's a nice discount on a high quality company. So should I buy more shares in Elevance, just hold my shares, or sell my shares? Let's take a look. I first want to really buy into the company. Do I think the company is a good company to have? Do I think the industry is a good industry to invest in? The answer for Elevance is yes. I like the stability of the healthcare industry. I like having a company that's a healthcare payer. They generate very good cash flow. It's just a very consistent company, and people really need healthcare. So I like those aspects of the company. Next is the performance of the management team. Do I think the company is operated well? In the case of Elevance, absolutely. Their performance quarter to quarter, year to year has been really good. So a very good report card on the management team. The balance sheet's in great shape. The debt is well below 3 times EBITDA. It's under 1% EBITDA, in fact. They produce a lot of cash and their EBITDA is very high. So the balance sheet is in very good shape for Elevance. They offer a nice 14% discount, which is a good discount on a great company. So I'm going to be a buyer of Elevance stock and a holder long term. Overall, this is a good stock. Although the healthcare industry has been held back in 2023 and 2024, the whole sector hasn't performed well. But Elevance has been a bright star in that particular sector. I imagine if the healthcare sector rallies, it's just going to help Elevance, the stock, go up even further. Thank you for watching the video. I hope you found it interesting.